Hello, welcome to my channel today. This is the King's Tutorial. The first time of joining us, ensure you like, comment, share, and subscribe to our channel. Okay. Now today we want to see a question on that relates to markup and margin and also control account. Okay. So we have done various videos on markup and margin, control account, and also on ratios. So if you have not seen that video, I will drop it up here so you watch that. Okay. Now let's get to the question. The question said the following information was extracted from the books of Kokumo Enterprises in 2010. We have opening stock 162,500, closing stock 137,500. Creditors, the opening balance 5,000. Creditors, the closing balance 125,000. And we have cash paid for goods during the year 500,000. We have selling expenses 68,500. We have administrative expenses 31,250, and we have markup, which is 25%. So you're required to calculate the margin, prepare total creditors control account, prepare trading profit and loss account, calculate the stock turnover rate, and calculate the percentage of net profit on sales. Okay, now let's move. The first one, it says the margin. Okay, now we have done how to convert markup to margin. Okay, I'll drop it up here. Ensure you check it. So now to convert, we are giving markup of 25%. Now the markup to margin. So 25% is 1/4. Now convert it to margin, you add the numerator to the denominator. So it will be 1/4 plus 1, which is 1/5. Okay, so that's how to convert from markup to margin. That's A. Now the B, they said prepare the total creditors control account. Okay, now I want to prepare the total creditors control account from this. So we have override creditors control account. Okay, so we're going to post only item that concerns the creditors control account. If you want to see more, check in the playlist on control account, you'll see the format. So we have opening balance 100,000. Our creditors have a credit balance, so it will be on the credit side. Okay, so we'll have the balance brought forward. How much is it? 100,000. Okay, now the next one says cash paid for goods during the year 500,000. It means they paid cash to the creditor. And remember, in the creditors control account, debit side contains what they received and credit side contains what they give out. So we have cash of 500,000. Now, why the creditors closing balance is 125,000. Now it will come here, balance carried down 125,000. So this will give us 625,000. So the balancing figure for this creditor control account will be the credit purchases. Credit purchases. That would be the reason for preparing this, because they are asking us to prepare trading profit loss account and we are not giving purchases, so it is these purchases that will be used there. So credit purchases. So they are supposed to be the same. 625,000 minus 100 will give us 525,000. Okay, so that is that. B. The next one, C. Prepare trading profit and loss account. Okay, so if we have a trading profit and loss account. So if we have our opening stock 162,500, we'll now have add purchases. So it is these purchases, okay, we got from this, that's 525,000. So if we add it, this will give us 687,500. Okay, so there's no carriage inward. The next thing, so let's close the stock 137,500. So we have less closing stock 137,500. Okay, this is 000, this is 0. This is 5. This is 5. That's 550,000. Okay. So now this will not be what we call the cost of goods sold. Okay. Now from this point now, if you check in this question, we're not giving sales. All we have is selling expenses. There's no sales. So we can't get our gross profit from here. Okay. But if you check here, we're giving markup 25%. So from this markup, we can get the gross profit, which can help us to get our sales. Okay. Because we're not giving sales, so we cannot use the margin. So we can use the markup. So markup is the relationship between the profit and the cost price. Okay. So now if we now let's do this here. Now remember our markup. It's a markup is the relationship between the profit and the cost price or the cost of goods sold. Okay. Now remember they gave us markup of 25%, which is 1/4. So if we do it like that, it will be 1/4 equals our profit is unknown, P over then the cost price is the cost of goods sold, 550,000. So it will be to get our profit. So if we cross multiply, we will now have 4P equals 550,000. So if we divide both sides by 4, so we'll now have our profit. The value gives our profit. So it will now be, this cancels this. 550,000 divided by 4 is 137,500. 137,500. So the profit is 137,500. So it means the gross profit here 137,500. So that we'll add everything now, it gives us 687,500. So remember, gross profit plus cost will give us our sales, which is 687,500. So it's 687,500. Okay. So now we'll bring down our gross profit here. That's gross profit brought down as 137,500. Now they give us expenses. We have selling expenses here, 68,500. We have administration expenses, 31,250. Okay, so that's all. Now let's not get net profit. So if our gross profit is 137,500, if we add these two, I'll deduct this as this 137,500 minus 68,500 minus 31,250. So our net profit is 37,750. So that when we add everything, it will give us 137. So this is the trading profit or loss account. Okay. Now the next one, I said D. This is C. D. Calculate the stock turnover rate. Now stock turnover rate is what we call the rate of stock turnover. Now the formula is cost of goods sold over average stock. But average stock is equals to opening stock plus closing stock, all divided by 2. Okay, so let's get average stock. Opening stock, what's opening stock? 162,500 plus what's our closing stock? 137,500, all divided by 2. So we have 162,500 plus 137,500. That's 300,000 divided by 2. This will give us 150,000. Okay, 150,000 as average stock. So our rate of stock turnover will now be cost of goods sold. What's our cost of goods sold? 550. 550,000 divided by average stock is 150,000. Okay, so it's now 550,000 divided by 150,000. So I have 3 points, approximately 7 times or approximately 4 times, depending. Okay, so that's the rate. YE, percentage of net profit on sales. So it will be given as the net profit over sales times 100 over 1. So what are net profits? 37,750 over what are sales? 687,500 times 100 over 1. So if we do that now, that's 7,750 divided by 687,500 times 100. So it will be 5.49%. Okay, so that's how to solve this question. Okay, thank you for watching this. Now, I'm going to give you an assignment. Ensure you drop it at the comment section of the YouTube. Okay, you see this question is closely related to what we did. Ensure you solve this question. The things I need in the question would be: number one, show me what is your margin. Number two, what's your credit purchase. Number three, what is your net profit. And number four, what is your rate of stock turnover? Okay. And number five, what is your percentage on net profit on sales? You are just going to write those figures I said now in the comment section. Okay. And I will respond to you accordingly. Okay. Ensure you do that with this question, the question showing now. Ensure you do that. Okay. Thank you very much. Now, if you've been wondering how you can solve markup to margin, you don't know how to do it. Okay. There's this video at the right. Ensure you watch it. I'll watch it now. Thank you.